Ladies and gentlemen, we are about to begin now. Good morning, good afternoon, or good evening to all distinguished speakers and participants. Welcome everyone. This is Yong-Wook Lee, Co-Task Manager of this webinar. It's my pleasure to welcome you here today. Now, I would like to open the second day of a workshop on transition finance in Asia, the session 4 of the webinar. At this session, we'll discuss climate-related disclosure effective for transition finance in Asia. We'll have a presentation on climate-related disclosure requirements proposed by International Sustainability Standards Board, Issb, with the Q&A session. After the Issb's presentation, we'll have a panel discussion. Now, I will introduce a moderator of session 4, Keiko Miskuchi. She will moderate not only presentation and Q&A session, but also panel discussion. She is an ESG economist in ADBI. Her areas of expertise include ESG investment, corporate governance, risk management, corporate financial and non-financial disclosure, and financial instrument evaluations. Prior to joining ADBI, she worked for institutions across various sections, including JP Morgan, Standard & Poor's, and PricewaterhouseCoopers. She also served for a number of government councils, including the Business Accounting Council of the Japan Financial Service Agency. Keiko, the floor is yours, please.
Thank you very much, Yong-san, Lee-san. I'm privileged to introduce Ms. Sue Lloyd, Vice Chair of Issb. She served as a member of the International Accounting Standard Board, that is Issb, from 2014, and as Issb Vice Chair from 2016. She also served as the chair of the Ifrs Interpretations Committee from 2017. I thank Sue for giving the opportunity for the stakeholders in Asia to hear words during the consultation period for the two standards proposed by Issb at the end of March. Thank you. The standards proposed by Issb have the benefit of providing investors with high quality information and act as a global baseline by allowing jurisdictions to incorporate them into their own specific requirements. By the way, at yesterday's session, voices heard asking for standard reporting and auditing also in the context of transition finance. In view of mobilizing institutional capital at scale from two finance transaction, it could be an opportunity for investors and lenders. However, investors and lenders are in need of transparency of information, quality data, to be able to make effective decisions to finance transition. Today, Ms. Lloyd would kindly make a presentation on the development of the Issb with focus on the proposed climate-related disclosure requirements, and the Q&A session will follow Sue's presentation. Sue, floor is yours.
Thank you very much, Keiko, and thank you very much to ADBI for this opportunity today to talk to you about our important proposals on climate and focusing on transition in particular. So if you just bear with me a moment, I am going to share my presentation, I hope. Can you see that? Can you see my screen, Keiko?
Yes. Can you please make it on full screen?
Yes, I just wanted to make sure you can see it.
Yes, we can see, yes.
Yeah, thank you. Okay. Okay, right. Okay, so firstly, yeah, thank you very much. So firstly, I just want to set the scene a little bit on the work of the board, and then I'll move on to the climate proposals in particular. So Just to give some background for those of you who aren't as familiar with the Ifrs Foundation, the Ifrs Foundation was established in the early 2000s, and it was established as an independent standard setting organization. And originally the focus of the foundation was on a board, the International Accounting Standards Board, whose role was to develop accounting standards to bring transparency, accountability, and efficiency to financial markets around the world. So since about 2002, the International Accounting Standards Board has been working on accounting standards, and now more than 140 jurisdictions around the world use our accounting standards. And it's with that background of the Ifrs Foundation that really has led to the development of the new board, the International Sustainability Standards Board, or Issb, as a sister board to the Accounting Standards Board within the Ifrs Foundation. So how did we end up with this new board? Just to give you a little bit of background, in 2020, the trustees who oversee the work of the Accounting Standards Board asked our stakeholders 3 questions. Firstly, was there a demand for a global set of sustainability standards? If there was a demand for a global set, should the Ifrs Foundation play a role? And if the Ifrs Foundation were to play a role, what should that role be? And in particular, what the trustees asked our stakeholders was, should we set up a standard setting board like the International Accounting Standards Board within the Ifrs Foundation? So very much the trustees were seeing if there was demand for us to do something. And the response we got was very strong. More than 750 comment letters from around the world saying that yes, there was a need for global sustainability standards, and that need should be met by the Ifrs Foundation by setting up a new board as a sister board to the Accounting Standards Board. We also asked a question about what the new board should focus on, and we again got a very strong message. Climate should be the first thing that the board should focus on, but we shouldn't limit our work to climate. It shouldn't be a climate standard setting board. It should be a board that addresses sustainability risks and opportunities more broadly. And so that's what the board's doing. Climate first, but not only climate. So in terms of where we are, at the moment, the Issb is newly established, and we're really excited that we now have a quorate board. We have now announced the appointment of 8 members of our 14-member board. That will ultimately be the number of board members we have. We have 8 appointed so far, and we're really excited that that means that in July, we will hold our first public board meeting to discuss the work of the board. So the chair of the board is Emmanuel Faber, and I am the vice chair of the board. We have a range of board members, as you can see on the screen. 4 of us, Emmanuel and I, Richard and Ndidi, will be based in Frankfurt. We have a multi-location model. So Jeff, Michael, and Verity will be based in America, in the North America, sorry, mainly in Montreal, and Bing from China will be based in our Asian office. So coming back to what the work of the Issb is all about, and this is a really important question. And the reason why it's an important question is because many people are interested in information about sustainability. So the board had to be very clear when in its establishment about who its customers are. So who is it targeting its information at, and what type of information is the board going to be focused on? And this is really important because it really sets the entire scope of work and focus for the new board. So where we are is that the board is very clearly focused on meeting the information needs of investors. As Keiko rightly said in her introduction, our focus is on meeting investors' information needs for them to decide where to allocate their capital and to understand the risks and the opportunities that they're exposed to. So the objective of the Issb, like the IASB, is to set standards that result in high quality information and a high level of transparency. And in the case of the Issb, the focus is on making sure that investors have what we call a global baseline of sustainability disclosures to enable them to understand the value, the enterprise value of a company. We call it a global baseline of sustainability disclosures because our vision is that across the world, jurisdictions would all require this consistent set of information to be made available to investors to ensure there's a good understanding of sustainability risks and opportunities, and that comparisons can be made for companies all around the world to enable investors to make informed decisions. Now, before I move on, I will say I talk about investors a lot, but investors are not the only beneficiaries of this model. It's also a really important model for companies, preparers of the information, because a global baseline of information around the world for investors also means that it's an efficient reporting system for companies. Think about a multinational company. If the same set of disclosures can be used to meet reporting requirements in multiple jurisdictions, that's a much more efficient and effective system for companies as well. So I think both companies and investors benefit from the idea of a global baseline of sustainability disclosures to meet investors' information needs. Now, we talk about a global baseline a lot. When you see me and my colleagues talking, you'll also hear us talking about the building block approach. So I want to explain that next. Now, the building block approach is really important because, as I said a while ago, it's not only investors that are interested in information about sustainability. If you think about climate risk, people on the street care about climate risk. It's important for everybody to understand. So we know that it's not only investors who are interested in this information, and governments are very interested in information about things like climate risk as well, for public policy reasons. So we know that it isn't only investors whose information needs need to be met. Jurisdictional information needs and needs of parties other than investors are also really important. Again, to have an efficient reporting system for companies and to ensure that even when a company is providing information to other parties, investors get the information that they need, we're working on what we call a building block approach. What does that mean? That means that we want jurisdictions around the world to require our Issb standards to be used, the red block in the middle of this page, to provide that consistent set of investor-focused information no matter where you are in the world. But to meet the needs of jurisdictions who may have particular pieces of information that they want for public policy purposes, or to meet the needs of others, for example, employees or business counterparties, additional incremental disclosure requirements can be set by others that build on our baseline. We call that the building block approach. And by working in partnership with others, which includes the Global Reporting Initiative, we hope to have an efficient system. Companies can use the same base to report to investors and others and add on incremental disclosures to meet other information needs. That's the building blocks approach. And so we're working hard with jurisdictions and with the Global Reporting Initiative to get this building blocks approach to work. The other thing that's really important about the International Sustainability Standards Board, and something that we are very lucky to benefit from, is the fact that we do have a sister standard setting board, the Accounting Standards Setting Board. We're within the same foundation. And this gives us a really unique opportunity. It means that the two boards can work together to make sure that the information that's provided in the financial statements works well with the information required in the sustainability reporting. We can make sure that the overall package of information meets the needs of investors. And we can make sure that our standards are complementary and do not conflict one another. So we're going to be working very hard to make sure that we have an integrated set of standards and an integrated approach to reporting, including working on the work, building on the work of the integrated reporting framework to meet investors' information needs. So we're very lucky to have this partnership with the International Accounting Standards Board. But I should also point out that we're not only working with the International Accounting Standards Board. When we draft our international sustainability disclosure standards, we are drafting them so that they can be used in combination with financial statements that are prepared in accordance with other sources of GAAP. So for example, if a company were reporting using Japanese GAAP or US GAAP, they should be able to do that and provide information using the Issb's standards. Again, really important because we want those standards to be used around the world. So with that background, I'm going to move now and start to talk about the proposals that we have out for comment at the moment. And then don't worry, I'm going to move on to climate because I know that's what you all really want to hear about. So firstly, the architecture of our standards. We're really lucky in a way that we have 2 exposure drafts out for comment at the moment. So at the end of March, we put out 2 sets of proposed standards. And this is really a good opportunity because it actually enables our stakeholders to see the sort of architecture or the skeleton of what our suite of standards is likely to look like over time. And I'm going to focus on 2 aspects of this architecture. The first on the left-hand side is the 4 core elements. In both the, we've got 2 documents out, I should say, sorry. A climate document, you know all about, and a general requirements document. And the general requirements document asks companies to provide information about all of their significant sustainability-related risks and opportunities, not just climate, but other things that might affect them as well. And in both of our exposure drafts, we have a common structure that we use, which is described on the left-hand side of this slide. Whatever the sustainability risk or opportunity is, we ask that a company provides information to explain 4 different things: how the risk is governed, the company's strategy for managing that risk, the risk management processes that are in place, and the metrics and targets that the company is using to monitor, measure, and assess their performance in managing those risks and opportunities. And those 4 threads come from the TCFD, the Task Force for Climate-Related Financial Disclosures recommendations. We've borrowed those and we plan to use those across our suite of standards. So that's the first aspect of architecture. The second aspect of architecture is our general requirements standard and our climate standard show how we plan to build out our suite of standards. So I said we have a general requirements proposal. It says that you have to provide information on all of your significant sustainability-related risks and opportunities. And then we have a climate document. That tells you what particular disclosures you should provide about climate when you have identified that as a significant risk or opportunity. Over time, we plan to build out more specific disclosure requirements on different sustainability topics. And so it's the climate is the first specific standard. Over time, there will be more. So that's the architecture. Now moving on to the climate document, and I'll focus particularly on transition risk, given the focus of the discussion today. So this is our climate exposure draft. If you print a hard copy, you'll see this nice pale blue cover, and it's called Ifrs S2. S1 is the general requirements document, so sustainability 2. And this climate document sets out the specific disclosures that the board proposes be provided to explain a company's exposures to climate-related risks and climate-related opportunities. In terms of scope, we focus on different aspects of climate risk. Firstly, physical risk. So what risks are you exposed to, for example, because of flood risk as a result of climate change? And transition risks. How might a company need to change its business model in order to adjust for climate change? For example, how might a company need to change its business because of regulatory action or because of reputational risks? How might they need to change their business model and what would the effects on a company be? But importantly, we also cover climate-related opportunities, and that's because investors are interested not just in the risks that a company might be exposed to, but also the opportunities. As you can imagine, there are some companies who have technologies or products which will be more popular in the case of climate change. For example, if you're building parts for windmills that are going to be used for electricity generation, you have climate-related opportunities, and investors are also interested in upside. So it's designed to be a symmetrical set of requirements. Overall, the document asks that information be provided to allow investors to be able to understand some particular things. And what we ask for is that the information provided enable the investors to just determine the effects of climate-related risks and opportunities on the enterprise value of a company. And we have a particular definition for enterprise value. Enterprise value is the value of a company's shares and the value of a company's net debt. So the focus of our standards is all about understanding how climate-related risks and opportunities would affect an assessment that an investor would make today about how much they'd be willing to pay for a company's shares or to invest in its debt. That's the focus of enterprise value that the Issb is interested in. We also ask for information so that investors can understand how a company is proposing to manage its climate-related risks and opportunities. What's its strategy for dealing with this uncertain future of our environment caused by climate change? And also, how are you planning to adapt your business model and operations as a result of that climate change? We only ask for a focus on the significant risks that a company is exposed to. And we ask for material information. And what I mean by that is that the information provided needs to be really important information. It needs to be the information that could be is reasonably certain to actually influence the decision that an investor would make when they look at the information that's provided about climate change that's described in relation to the performance of a company. And as you can imagine, what's important for one company might be different to what's important for another company. For example, the information will vary depending on the industry in which a company is based or its geographical exposures. And so an assessment needs to be made by a company to really decide what information is really going to matter to my investors given my particular circumstances. So there's judgment involved. Now, if you pick up our climate document, if you've looked at climate reports or climate standards in the past, you'll recognize a lot of what you see in our document. And we're not embarrassed that we've copied the work of others. We're really proud that we've copied the work of others. And that is because one of the very strong messages that we heard in the trustees consultation that I was talking about right at the start of my presentation was that people said a lot of great stuff has already been done. And also a lot of companies have also already started to report on climate risks. So don't start with a clean sheet of paper. Start with good work that's already being done, which will speed up our processes, allow us to benefit from the work that other standard setters have already done. And also importantly for companies who have already started to report, it means that they can build on their current reporting processes. And also investors are already getting some good information about climate. They can continue to get that good information. And so we're on purpose, we've built on the work of others. So if you pick up our climate document, you will recognize two really important things. The first is that the front part of the document is very much based on the work of the Task Force on Climate-Related Financial Disclosures, the TCFD. I've already mentioned we use their structure. So we ask for information about governance, strategy, risk management, and metrics and targets. We've taken that from TCFD because we think that's a really good way to explain how a company thinks about managing risks. We also include in the front part of our document, I think 7 cross-industry metrics and targets, and they were taken from the TCFD recommendations. What we have done is we've increased the level of specificity in the wording in the front of our document. So our words are not exactly the same as TCFD's, but the ideas are based on theirs. We've changed our wording because we want to be more precise, and we want these standards to be capable of being enforced by regulators around the world and to be subject to assurance. We want this to be high quality, reliable information like that in financial statements, as close as we can get. And to support that, our words are more formal words. It's not an accident that I was on the International Accounting Standards Board and now I'm on the new board. We're trying to bring the rigor of our drafting to the sustainability space. Now, the back part of our document, Appendix B of our climate document, will be very familiar to those of you who know the SASB standards. And that's because we've consolidated with the we're consolidating, with the SASB as part of the establishment of the Issb. They have industry-based requirements, and we've taken the climate-related industry-based requirements of the SASB and put them in the appendix to our document. They're in the appendix, but they're proposed to be mandatory. If you are in that industry, you have to provide these disclosures if they're material for your investors. Now, these are basically the same as the SASB standards, but we've done two things to change them. The first is that some of the SASB's requirements were quite US-centric. So they referred, for example, to US legislation. To make them applicable around the world, we've made changes, proposed changes to the SASB standards to make them more international. Also, the SASB's climate metrics were a little bit old-fashioned. The pace of change in this area is very, very quick. The SASB standards are now a few years old, and so we've taken the opportunity to update the SASB's climate requirements to address financed and facilitated emissions. And I'll come back to that in a moment. But overall, the main message on this slide is a lot is familiar. So it means that those who were using the TCFD requirements or the SASB standards before have got a head start. Now, moving on to some of the specifics of what is in the climate document. I'm going to come back to transition in a minute, so I'll focus on the other two points in this slide for the moment. So one of the important areas of the proposals for climate disclosures is in the area of climate resilience. We've asked companies to provide information to enable investors to understand how the business is thinking about its strategy, its business model, its plan for its assets and its activities in the future in different climate scenarios. We really want to make sure that investors can understand the thought process of companies. Ideally, we ask for information to be provided using a scenario analysis, climate-based scenario analysis, looking at how the performance of a company in the future and the use of its assets would vary in different climate scenarios. We also ask for information about Scope 1, Scope 2, and Scope 3 greenhouse gas emissions. This is very much consistent with the proposals in Europe and also the proposals of the SEC in the US. GHG emission information is really important for investors, not least because it gives information about how much a company might need to change its business. If it's a high emitter of greenhouse gases, what's it planning to do to reduce its greenhouse gas emissions to address climate change? That can have big effects on business model, so that's important information for investors. Moving to the next slide. Now I'm going to talk in the next couple of slides about transition in particular because of the focus of today's discussion. And transition plans and targets are an area where we have put quite a bit of proposed information in the document. And that's because for investors, really understanding how a company might need to change its business in the future in a response to climate change is a really important area for investors to understand risk exposures, but also opportunities. And I think also just to get comfort that actually the board of a company is thinking about this. This is a really big risk And so how is the board thinking about managing such a high level of uncertainty? So one of the areas where we have proposed disclosures in the standard is in relation to transition plans and targets. And so we're asking companies to provide information to explain how they're planning to change their business, to transition for climate change. And in particular, one of the things that we're asking for is what their carbon emission strategy is, not just what their targets are, but how do they intend to meet their targets? Are they using carbon offsets? Are they actually going to reduce greenhouse gas emissions? If they're going to reduce greenhouse gas emissions, is that their own business directly where they're going to reduce emissions, or is it in their supply chain? What we want to do here is provide transparency. We're not trying to judge whether or not carbon offsets are a good way to address climate change, but what we want to do is to give investors enough information to really understand what is the company's plan, so the investor can understand whether they think it is credible. Do they think they're actually going to be able to do this, given the way they plan to meet their carbon targets? And also so that they can decide whether they agree with the carbon plan. So some people like carbon offsets and others don't think it's an appropriate way to address climate change. By providing transparency about this, we're neutral. We don't judge whether or not carbon offsets are good or bad, but it means that investors can understand whether or not a company is using carbon offsets, which offsets it's using, and then it can ask questions of the company, or it can allocate its capital to companies where their transition planning is one that the investor really supports, either because they think it's more credible or because they agree with the strategy from a policy perspective. It's all about transparency of information. We also, as I said, have got some proposals on financed and facilitated emissions. So in the industry-based disclosures, which are in Appendix B to the climate document, if you're from the finance sector or interested in the finance sector, please have a look at the chapters for these 4 industries in the finance sector: commercial banking, insurance, investment banking, and asset management, because we've got some new proposals in here about financed and facilitated emissions. And this is new. It wasn't in the SASB standards. It's something we feel the time is right. There's an increasing interest from investors in this area of disclosure. It's still an evolving field. The measurement techniques are getting better over time, but we think it's appropriate now to start asking for this information. And this is really important information. And for me, it's really important information because if you understand the financed emissions of a bank, for example, you understand how much of its financing is linked to particular carbon intensive industries. And that's an important source of transition risk. If there's pressure on banks to reduce their funding to particular industries, this gives the transparency to understand how they may need to adjust their business model to change their lending behavior to address those policy objectives, which may suggest that funding be diverted to other places. It can also show the change in the trend in the way that a bank is providing funding. Over time, by seeing the change in financed or facilitated emissions, you can see how the business model is changing. If you've got a bank which is more advanced in changing the way that it is lending money, it will look different to its peers. And that's interesting and useful information for investors. And so this area of understanding of just how much of your profit and your funding is giving exposure to particular types of business is an important source of information for investors, and one, therefore, that we decided should be included in our proposals. Now, I'm hoping that you are all getting ready to send me comments. I need lots of comment letters on my proposals. You've still got some time to put your comment letters together. The date that comments are due is the 29th of July. You can either fill in a survey or send us a comment letter. We're really interested to hear particularly about whether the proposals are suitable for smaller companies and in emerging markets. And we're very interested to get specific feedback on the industry-based requirements in Appendix B to the climate document. So please do send us your comments. They really do help us get good quality disclosure requirements. And so please, it really is a good use of your time to respond to us. It's also really important to respond to other jurisdictional proposals. Europe still have proposals out for comment at the moment. If you are supportive of the idea of a global baseline, it's good for others to hear that it's important to you to help support our work to establish the global baseline. Just before I wrap up and hand back to Keiko to lead us through some questions, let me talk about the next steps for us. So as I said, we're really delighted that we now have 8 board members, which means we can start to hold board meetings. And as I said, we will start our discussions in July. At the July board meeting, we will have an initial overview of the feedback we've been getting in the consultation so far. In our outreach, we don't have many letters yet, but we've been having lots of meetings with people. So we have a good idea of the feedback we're getting. The board will start to hear about that in our July meeting, the week beginning the 18th of July. The comment letter deadline is the 29th of July. We're hoping that we will be in a position to start looking at the feedback at the board table at our September board meeting. And then we will be trying to finalize our deliberations, hopefully in the last quarter of this year. So we're working as quickly as we can, but as carefully as well to get good quality documents finalized as soon as possible. With that, I'm going to hand back to you, Keiko.
Thank you very much for a very informative, really enthusiastic information. It's really appreciated. For the I will now open the session to the question from the floor. But before that, I myself have some few questions to you. Is that okay? The question one, as far as I understand, what ISB has decided, what is leverage SASB, you explained to me, SASB's industry-based approach in developing standards, just leveraged it. It's really great. But from that point, SASB's industry-based approach is in a way largely rooted in experiences in the United States, if I'm right to say that or not. But would ISSB plan to check into how the proposed industry-based approach fit to the various jurisdictions? Would you possibly consider the flexibility in applying the industry-based approaches or not? That's my first question.
Thank you for that, and that's a very important question and one that I'm asked quite a lot. So let me talk. Maybe I'll start by talking about what I see as the benefits, if I could, of the industry-based requirements, and then I'll come to your questions about international applicability, and also I think you're getting at the proposal for them to be mandatory and whether that's a good idea or not. So if you could indulge me just for a second, I'll talk about why the industry-based requirements, have got an important place in our proposals. So the first thing I'd say is that we've got quite a lot of feedback in the consultation from the trustees that said that when we establish the new board, that part of what we should require in the disclosures should be industry specific. And that's seen to be very important for investors and a little bit different from the accounting world that I come from, because investors tell us, and companies agree, I think, that the way that sustainability risks affect the company's, the value of a company can be very different by industry. And so this idea of industry specificity, because of our focus on understanding what really drives and could make a difference in the value of a company, is a really, really important aspect. So having industry specificity was something that we were asked to have as part of our suite of standards. And I think what's good about the industry-based requirements is really, both from the investor perspective, it means that there's particular pieces of information that were identified as being very relevant to understanding enterprise value. So if we do the industry-based requirements well, we need to make sure we do them well and that they are international, which I'll get to in a moment. But if we get those industry requirements right, we know for sure that information is important for investors. And so it's really decision useful, really great information that really meets investors' information needs. So when we identify the right information, it's very powerful information for investors. And from a company's perspective, it can be very beneficial. Because if you think about it, when you look at our Appendix B to the climate document, it's a big appendix. It's many hundreds of pages. But you have to remember that if you're a company, you only need to apply the chapters that are relevant to your industry or activities. And that's usually a small number of industries or activities. It means you know exactly what disclosures need to be provided. So it's a very efficient way, in a sense, for a company to meet information needs of investors, and you know that it's the right information. So it's a good use of your time as a company, because you know for sure that this is relevant information for investors. So I think there's benefits in the industry-based requirements, which is why personally I think they're a very good thing. Yeah. And also, if I think of them from a sort of policy perspective, people are worried about greenwashing. If you have to provide particular information that's very comparable because it's very specific, that's the best defense we have against greenwashing from a company perspective. And so they can be powerful. But let me get you back to your question, Keiko. So you asked about international applicability, and this is a really, really important question. And that's why we've put these out for comment. And it's why we've gone through an exercise of trying to make them more international. We really want to understand from our consultation process if they are internationally applicable. I need feedback from our stakeholders to confirm that these SASB standards, which were developed with a careful process, but based in the US, not only in the US, used by international companies too, and international investors. But we need to make sure that international stakeholders have the opportunity to look at them and say, yes, we agree these are international enough, or they say, actually, they're not. But if people are going to write to me and say they're not, you could really help me by giving me specific examples of where there may be things we need to adjust. And we really want to make sure that we all work together to make them internationally applicable. So that's really an advertisement break. Please send me comments. Yeah.
People who are hearing his voice, please.
That would be really important.
Yeah. Right.
And I think the other important thing, which you touched on there, was sort of the status of these. So we've proposed in this document that they are mandatory. If they're material, so if they're important enough for your investors in your particular fact pattern, they have to provide these industry-based requirements. I think that's important. If they are the right requirements, it's important that they're mandatory in a way, because it means that we have for sure the right quality and comparability for investors. But we need to make sure first that they're the right disclosures. So getting your feedback is important. And also I think we need to think about whether people might need some more time to apply the industry-based requirements, and maybe a longer time to apply those than the front of the document. And so that's something that we'll think about as well.
Great. I have a question from Didi Beck. The chair also asked a question. She kind of said that the sustainability standard, sort of a standard, is really developed in some jurisdiction. And then, how you're going to sort of involve Asia, looking forward, outreach the area further, or what would you do? And then also from Didi Beck, just following up the chair's question, it is necessary to develop global standard of sustainability reporting, or is it better to have regional standard of the reporting according to the condition of each region? That's a question addressed. What is your view? It's really interesting, or just kind of funny for me to ask you the standard setter of the question, but what you're hearing? Yeah,
ask the global standard setter if they believe in global standards. Yes. So two things. So firstly, we really, really want input from Asia. So we want to be sure that these really are suitable for international applications. So thank you to ADBI, because it's events like this that really make sure that Asia is involved in the discussion, aware of the proposals, and we really can get you engaged in the debate. So thank you. This sort of event is wonderful for that purpose, because we really do want an international range of feedback. So I really encourage you to get involved in the discussion so that we can do that. Now, do I think that there needs to be national or jurisdictional differences? My response to that actually is yes and no, which might surprise you a little bit as an international standard setter, but let me explain what I mean. Capital is a global business, and businesses are global. So I think there really is a need for a base set of information which is truly globally comparable. Investors need to be confident that if two companies look different, or indeed if two companies look the same, that they really are the same or different based on a common understanding of information, not just because different data is provided in a different place, and so it's giving the appearance of similarity or difference, which is because of different disclosures as opposed to real economic differences. So I think that the case for global comparability and a consistent quality to give confidence to investors that you can be as confident investing in a company no matter which jurisdiction it comes from is really important, not just for investors but for companies and for the cost of capital as well. You don't want investors to be worried that the quality of information is different because of a jurisdictional difference. So I think global comparability is really important for investors, and it's really efficient for companies as well, because you don't want to end up in a situation where if you've got filing or compliance requirements in different jurisdictions, that you've got different information that you have to provide. It's not an efficient system. So I think a global comparability is really, really important as a common set of requirements. But having said that, we need to be careful that we are setting requirements that really are appropriate to be applied globally. So that comes back to the question about the industry based, and that's why we're consulting to make sure that it really is an appropriate global baseline. Even when we do establish the common set of global requirements, it can still be the case that there will be particular pieces of information that are very relevant in a particular jurisdiction, or there may be something very particular about an industry in a jurisdiction, perhaps because of national legislation or regulation or something that has a very specific effect on companies in a jurisdiction, which means that additional pieces of information would be appropriate to have on top of the global baseline, which is one of the reasons why we have this building block approach. I think that there's a place for that. We need the global baseline, but we also need to acknowledge that there will be reasons for some incremental information needs because of particular jurisdictional differences that are important for investors to understand.
Yeah, thank you very much. I guess probably Carrie can really answer the investors' needs from this perspective also, but thank you very much. I guess the time is sort of, we almost used that time, and then all the panelists really eager to really talk and share the information, the views. And so thank you very much for a really insightful and informative session and presentation. And I'd like to move to the panel discussion. Thank you very much, Sue, for your presentation and then Q&A session. First, I would like to introduce panelists. By the way, Sue would continue to participate as panelist. And we have 3 additional panelists. I would like to each panelist to make 5 to 7 minute presentation, which will be followed by a panel discussion and then Q&A. Let me introduce 3 additional panelists now. The first panelist is Carrie Werning. She's CEO of the International Corporate Governance Network, ICGN, a global governance organization led by investors responsible for really assets of $59 trillion based in over 40 countries. So as you can see, Carrie is very knowledgeable about the various investors' view across the countries. She will share investors' view on the climate-related disclosure with global outlook. The second speaker is Kush Chatter, Executive Director, CFO, Tata Steel. He's a member of various global thought leader platforms, including TCFD and more. He shares his views from the perspective, various perspectives, including the perspective of the preparer of the climate-related disclosure. The third speaker is Doug Nevin, Chief Accounting of the Australian Securities and Investment Commission. He is responsible for strategy and policies and on financial reporting and audit. His role in IASC, he also had a role in IASCA. He is a member of Committee 1 and also Sustainability Technical Review Coordination Group and the International Forum Independent Audit Regulators. Doug would share us with the experiences and the issues on the reporting to date and various views on the proposed ISSB from the perspective and the Australian regulator. Also, the fourth speaker is Makoto Sonoda. He's Director of the International Accounting and the International Capital Market Regulation, Financial Services Agency, the Government of Japan. As his role at the IASCO, he has served as the chair of Committee 1, co-chairing the assurance work streams of sustainability reporting. He shares information on the development in Japan and development of the IASCO, largely related to the climate-related information. Now, first, Kerry, the floor is yours for 5 to 7 minutes.
Thanks so much, Keiko, and really great to hear from Sue. And I should say from the outset that ICGN is a huge supporter of the work that you're doing, Sue, and indeed the establishment of the ISSB itself, which we really view as a milestone moment in the world of global sustainability reporting standards. So, so well done. Of course, ICGN welcomes assertive action by regulators and standard setters on climate-related reporting. We've been very busy responding to consultations, submitted our response to the US SEC last month, and are busy as we speak drafting our response, or I should say George Dallas and the team at ICGN are responding to the ISSB consultation and also EFRAG's consultation. So we absolutely welcome efforts to harmonise sustainability reporting standards globally, which will reduce the burden on companies and equip investors with rigorous, comparable and verifiable sustainability information, backed, we hope, by regulation and enforcement. And this will really help enable the proper assessment and pricing of climate-related risk, opportunity and resilience in investee companies. And it provides a tool to review progress towards corporate transition plans and carbon neutral investment portfolios as we collectively advance towards a net zero global economy by 2050. You may be aware that the proposed European Corporate Sustainability Reporting Directive was published just last week, which includes reference to the ICGN Global Governance Principles, which is a really important document for us because our members, and in fact they represent around 70 trillion these days, use this document in their voting policies and their company engagements. And ICGN is cited alongside OECD as an authoritative global framework of governance information of most relevance to users. GRI and TCFD are also recognised as reporting frameworks. And once approved by the Parliament and Council, EFRAG will link this to European reporting standards applicable, as you might imagine, to the 50,000 largest issuers based in Europe, I think from January 2024. So this is a big development. We welcome Europe's approach to double materiality, requiring companies to report not only on sustainability factors impacting the performance of the company, but also the impact of the company itself on society and the environment. And we appreciate and understand that ISSB is building its framework in a more targeted way, starting with climate from a single materiality lens, which measures sustainability impacts on the financial position and prospects of the company itself. Materiality is dynamic in nature, and an issue of little relevance today can have clear financial impacts for companies in the future. So as public and political scrutiny increases really on the role of companies and indeed investors, it's in all of our interests to harmonise these concepts to the extent possible. ICGN also applauds efforts to expedite regulatory requirements aligned with the TCFD, and together all of these initiatives present a historic opportunity for a globally harmonised baseline of sustainability reporting, which will help, we think, minimise regulatory fragmentation. So good governance is the backbone to achieving a company's public commitments, and we expect companies to disclose how their boards oversee the adaptation of business models to net zero carbon emissions through credible and actionable transition plans. Many surveys have found that climate competence is lacking on corporate boards, alongside there being insufficient discussion linked to climate strategy, or indeed climate strategy even being mentioned on board agendas. So boards should seek directors with broad knowledge of sustainability matters, whilst also relying on outside advice when necessary. And we expect boards to ensure robust processes to keep them sufficiently educated and informed of systemic risks, including climate change. We therefore welcome ISSB's suggested disclosure requirements to include board expertise, resources, and the process and frequency by which the board and/or committees discuss climate-related risks. And we also think that this should be referred to in the board charter or appropriate committee terms of reference. With regards to strategy disclosure, companies should describe the impact of physical and transition risk and opportunity on business models aligned with net zero transition plans, including metrics and targets. And the strategy should be periodically reviewed and progress towards achieving key objectives reported annually to shareholders. Scenario planning aids strategic and risk management decisions in a structured and analytical way. So disclosure really is essential for enabling investors to assess how different scenarios may impact risk, strategy, business models, resilience, and so on. And ICGN supports disclosure of scope 1, 2, and 3 emissions. We recognise debate around the reliability of scope 3 information, but these disclosures are material for at least 68 out of 77 sectors, according to SASB, and therefore we think they should be mandatory. A comply or explain approach may be appropriate for the remaining 11 sectors, but any company proclaiming a net zero strategy, regardless of sector, should disclose mandatorily.
Carrie, time is.
Okay, sure. I'll pause there. I can talk much more, but thank you.
Yeah, thank you very much for later probably. Then the next speaker, Kushk, floor is yours.
Thank you, Keki, and a very good morning, good afternoon to everybody. I think I'll take a few minutes to talk about Tata Steel and how we see the ISSB draft exposure document. So Tata Steel has been a very early adopter of sustainability reporting in India way back in 2001 as part of the GRI framework. We've been publishing our integrated report since 2015-16, and we have identified the UN SDG framework and the recommendations of TCFD, and we've adopted the same for our reporting purposes. We also, as a preparer, you've got to look at large complex companies with very strong IT systems, and that's what we are doing. We're bringing in an IT reporting platform to enable consolidated and comprehensive automated non-financial reporting, and we're working towards convergence of non-financial and financial reporting for the company. We have already declared that our net zero target would be 2045, and we have decarbonization plan customized to each of our geographical locations, be it India or in Europe. In India, we continue to grow because India is a growing country. And Tata Steel is focused on growing the business, but looking at carbon intensity and ensuring that the carbon intensity for per capita of growth is lower and lower. And in Europe, we are, because it's a more mature market, and just what Kerry mentioned, we have looked at absolute carbon emissions reduction targets of about 30 to 40% over the 2018 level, which is aligned with the EU and the UK requirements, both from a Dutch requirement for Fit for 55. As you all know, steel is a hard-to-abate sector, and it is important that all stakeholders share the pain for the transition, because the transition is painful. And yet, as a steel is a fundamental material in our lives, we need to ensure that we invest in technologies, and we ensure that the policy framework by the governments all across the world help transition in the hard-to-abate sector. This is very fundamental. And similarly, the customers, as we see, are becoming more and more alert towards paying for the premium on the decarbonization. And I think investors and lenders need to also start investing in decarbonization, just not focusing on greening their portfolio. And I think this will be very important for the transition process. The role of transition finance is obviously very critical, and governments, central banks, and developing financial institutions, especially in geographies like the emerging markets globally, would have to find ways in which they can fund the investments of decarbonization. And we certainly look at institutions like ADB to play a very lead role in this process. And I think it is important that there is a need to ensure there is robust requirements for reporting, which makes sector-specific comparisons and comparability in a transparent manner, and we certainly support that. I think a minute or two on the Issb exposure draft from a preparer point of view, we certainly welcome the sector-specific approach, and Sue just alluded to it a few minutes back. I think the very supportive of the integrated reporting and the connection between financial and the sustainability disclosures. One point which is important for me to mention is that the materiality assessment has been left to the judgment of the preparers. In the initial period, it might lead to inconsistencies in reporting, and maybe some sort of a guideline would be helpful on this part. Secondly, on the basis of the reporting standards is essentially investors and lenders. However, if you look at the sustainability landscape, there are other stakeholders which have become very critical in recent time, and we're seeing this in Europe in particular, which is communities, regulators, government, and so on. So I think a part of that reporting requirements to look at from their angle would make it more holistic. And finally, the steel sector is, as we know, is a hard-to-abate sector. I think we just need to look at distinguishing between emissions and emission intensity, especially from different process routes like the blast furnace route or the electric arc furnace route, and also to ensure that we can separately report steel and mining operations. So I think that will give more transparency and more insight into the preparers or the company's performance. So with that, I will close my comments. Thank you.
Thank you very much for insightful comments. So the third, Doug, the floor is yours.
Thank you very much, Keiko, and I do have a small number of slides, so excuse me while I get those up and running. Okay. That way you don't need to look at my ugly face through it all. So hopefully everyone can see the slides. As Keiko mentioned, I wanted to talk a little bit about what's happening in Australia in relation to our current reporting and how how stakeholders view the Issb developments. And so I'll start though by saying, usual disclaimer, personal views are not necessarily the views of my organisation, although hopefully they are. In terms of current financial reporting and audit, like many jurisdictions in Asia Pacific, we do apply the International Financial Reporting Standards and of course the international standards on auditing as well in the financial reporting context. Climate change, not a surprise that we're already saying that companies need to focus on, particularly large emitters, the impact of climate change, potentially on asset values, impairment of assets. We've got a large mining sector, what it means for provisions such as mining restoration provisions, and disclosures, incredibly important. The financial reports around some of the key assumptions are made and where there's source of estimation uncertainty around where we're heading in the future. I couldn't help but put in a plug for digital financial reporting. It's voluntary in Australia. Mandatory is a great idea. We use the Ifrs taxonomy, but on a voluntary basis. Since 2010, no one's actually lodged a digital financial report with us, but we see some opportunities, which I'll come to in a moment, with the climate and sustainability reporting. Just to fill it out, like many countries, as well as a financial report, the financial report is complemented by what we call the operating and financial review for listed entities. Elsewhere it's called management commentary, management discussion analysis. So listed companies are already required to disclose a lot of information that's relevant around drivers of their business models, their strategies, and future prospects, which implies also the most significant risks. And we specifically say in our guidance that includes climate and ESG type risks. We've, for a number of years, strongly encouraged companies to adopt the TCFD recommendations, and quite a number have done so, which is very positive. And that will, for the reasons that Sue mentioned, because the same 4 pillars and so forth, assist in the transition to Issb standards. In terms of assurance, though, at the moment, of course, under the ISAs, the auditor doesn't actually sign off on the operating and financial review. What they do is to read it for material inconsistencies with statements. So that's an interesting area, the assurance one. So going forward, adoption of standards in Australia, consistent with what everyone else has said, all the stakeholders we've been speaking to, whether it's investors, companies, accounting bodies, whatever, strong in-principle support for adoption of Issb standards and a comprehensive global baseline. I'm probably repeating others in saying there are enormous benefits in terms of companies that operate across borders, investing across borders or seeking finance and fundraising. And as a securities regulator, we're focused on investor information needs. And clearly this area, climate and sustainability, is so important for the reasons that have been mentioned before. The financial report gives you a lot of good information about the company, but it doesn't give you the full value information, and that's what you need, the enterprise value type information. We've actually had a federal election, a new government. We've already had a statement from one of the ministers that they support mandating international standards. They didn't specifically say Issb, for the larger listed entities and financial institutions that would be sort of rider subject to consultation. So in terms of the Issb standards, you often think about, well, what does this mean in terms of feedback to the Issb? But there's also things that we need to think about in Australia, and probably in a lot of other jurisdictions as well. Who actually makes the standards in Australia? There is actually no body that's empowered to make the standards, and at the moment, there's no requirement to follow them. So the Australian Accounting Standards Board is doing some good work in this area with a wraparound consultation. But should we have a new Sustainability Standards Board? Should ASIC, as a securities regulator, make requirements through the OFR? Or should some of the requirements be made directly by government? Whichever way you look at it, new legislation is going to be required to put this in place. There's questions around data availability, and that's sort of been touched on. And it may be that there's a role for government in terms of some of the scientific analysis of required scenarios. And we're sort of conscious, given that statement by government, well, maybe some of the smaller entities aren't going to be reporting. So you may need models for investors to use to work out the scope 3 emissions for particular industries. we've also got a greenhouse gas reporting regime for large emitters, which does involve insurance by auditors. Well, what do we do with that regime? Does it stay? Is it replaced? So there are some questions there, and very conscious about the global consistency issue there. And as has been touched on, timing is a real question that's been asked. Investors want the information now. Companies say, well, yes, we need a bit more time to prepare, maybe transition period, and some of the requirements might need to be phased as well. So this is all sort of discussion in progress. There's a real passion for digital information on climate metrics and so forth. And we see that as quite positive, because if we get mandating of the climate and sustainable information, you probably should be mandating the financial report information as well. You've got the whole package. There are questions about who provides the assurance. I could spend probably my whole 5 minutes talking about that, but I better be quick. Yeah, what level of assurance is given on parts of the information, and when should assurance occur? Should it be the same time as you have the first reporting? Some of the stakeholders, particularly preparers, have raised reliability questions around forward information. In Australia, the test is a reasonable basis test. Now, that means if you've got a base, you've gone through it all, you disclose your uncertainties, whatever assumptions there are, and update the market if information changes. You shouldn't have a liability information. In fact, there is already disclosure of this type, not to the same degree, and yeah, we seem to be coping with those liability issues. Some have raised questions about sensitive information as well. We've had those issues in our operating and financial review, and to be honest, often they're overstated. Yeah, maybe questions about, do I disclose, a takeover bid that I'm about to launch? That's perhaps a bit different, but competitors generally know the information, or it's not going to be the granularity that they can use for competitive purposes. Yes, we talked about GRI. There's a question here. A lot of support for adopting the Issb standards, the enterprise value. There's still questions about, well, hang on a minute, what about the double materiality and social impact? Even though there is actually an overlap between the two, enterprise value will give you a lot of that information anyway. I better talk quickly, Keiko. So fragmentation is being talked about, and we're pleased that the Issb is working with the other parties on that element. Yes, there's been questions about the industry metrics, and I was pleased to hear what some of the other speakers have to say. And I've heard Sue talk before, and quite rightly say, well, you don't need to, as a single issuer, look at 634 pages. It's your industry. And of course, we've heard about the materiality guidance that Kushik talked about as well. So very quickly, that's the periodic reporting part. Yes, greenwashing is something we're very focused on. Yeah, our products being described as being green that really aren't in the market, and a product taxonomy is actually being developed in the private sector. And just to mention, we're also focused on, as a securities regulator, what our role is in actually regulating carbon markets and trading. I think I might have blown my 5 minutes. I better stop there. So I'm looking forward to the questions. So thank you very much.
Thank you very much for insightful presentation. Last but not least, I welcome Makoto. Makoto, the floor is yours.
Thank you very much, Ms. Witt-san. So last but not least, it's my turn. So I'm very happy to join this panel discussion with other distinguished guests. So that thank you very much for inviting me to this. And I understand that Keiko is very cautious of the time management. I also understand that time management is a very important KPI for the moderator, so that I should make a contribution for that Keiko could achieve her KPI. So I'm having a presentation slide. Let me show this screen. Oh, you can do? That's very great. Thank you so much. So I have a 18 pages long presentation slide, but of course, for the time efficiency, I'm not willing to cover all the materials, so that let me pick up some important points. So in this presentation for the page 2, I'm thinking to introduce a recent discussion and also development in Japan. And also that I'm also having some roles of the IOSCO, International Securities International Organization for the Securities Regulator. So that I'm very happy to introduce recent discussion and also development of the IOSCO as well. So please move to the page 4. So this is the main summary of the development in Japan. So that the first point is that we've enhanced the climate disclosure based on TCFD. And also that we've also, second point is we've discussed whether and how to incorporate sustainability reporting into statutory reporting framework. So if I may, I would like to give more details on these 2 points. The first one is that please go to the page 6. Sorry, page, no, it's a page 8. Sorry about that. So that one of the important point is that revision of the corporate governance code. So corporate governance code in Japan could be applied for the all listed companies in Japan. And we had the revision of the corporate governance code on last year. And the one, I think that Katie is very familiar with this, but that one of the main important point of the revision of the corporate governance code on last year is that enhancing the quality and also quantity of climate-related disclosure based on TCFD or other equivalent international framework for the major listed companies. So following this corporate governance code, major listed companies are now required to make a disclosure based on the TCFD or other international frameworks. So that could be the kind of step 1 in Japan. So what's step 2? So as I mentioned that we've discussed whether and also how to incorporate the sustainability information into the Japanese statutory reporting framework. And on last month, June, the working group under the Japan FSA published its report to show the direction of this corporate disclosure for the time being. So that the summary of this report is shown on the page 11. Thank you very much. So the most important part is that now we are thinking to establish a new part within the annual security reports under the statutory reporting framework. And in this part, sustainability information will be required to make a disclosure for all listed companies. That's almost around 4,000 companies in Japan. And in this sustainability information part, there is 4 main categories here. So, and that's governance, risk management, strategy, and also metrics and targets. So that's consistent with Issb S1 and also S2 exposure drafts and also TCFD framework. And for the time being, the governance and the risk management factors will be disclosed by that could be mandatory required for all listed companies. But at the same time, strategy and the metrics and targets, that's also expected to make a disclosure for all listed company, but it's not a mandatory required. So that could be based on the materiality judged by the preparer side. So that's the summary of the report published on last month. So that at the FSA, we are now thinking to revise the regulation in Japan, hopefully within this year, so that we could prepare for this new reporting framework as early as possible. That's the current situation in Japan. But of course, this is not the end of the discussion in Japan. So that as Doug mentioned that we should have a further discussion in each jurisdiction. So how that how to apply FESA and also how to apply the ISSB future standards after its finalization of the standards. And at the same time, in Japan, the new standard setting body of the sustainability reporting, it's called the SBJ, was also established, and it's now becoming active from the beginning of this month, so that we should also have a discussion on the how the SSBJ's future framework should be will be incorporated into the Japanese framework, so that this is that maybe a never-ending discussion, but we are thinking that have a further discussion after the summer vacation. So this is development in Japan. So let's move to the next page, so that I'm also very happy to make an introduction of the development of the IOSCO. Of course, that Doug is also a member of the IOSCO various committees and task forces, so that he's also very familiar with this. In my some capacities as a chair and co-chair's role of the IOSCO's working groups and committees, I'm very happy to make an introduction of the IOSCO discussion. One of the main point is that we've discussed this issue in these 2 and more years very intensively. And also we also have some kind of a step-by-step approach, similar same as in Japan. One of important first step is that the report of the sustainable finance and the role of the securities regulators and IOSCO. So page 13, please. Thank you. So that for the information sharing among members, IOSCO established a network on the sustainable finance, and through the activities of the network, the IOSCO published a report on the sustainable finance in April 2020. And through the communication and also engagement with various kinds of stakeholders, we've recognized that there was a very strong demand for the more comprehensive global sustainability reporting standards to avoid any kind of a market fragmentation and also to escape from the alphabet soup situation. So following the discussion, the IOSCO has decided to establish the task force on sustainable finance. And through the discussion of the sustainable finance task force, one of the main important outcome on the sustainability reporting is that the reports on sustainability-related issue disclosures that's published on last year. Please go to the page 16. So just 1 year ago, the IOSCO published a report on sustainability-related issue disclosures. It's almost that 100 pages long. So of course, it's shorter than the ISSB exposure draft, but maybe it's a little bit long for stakeholders to read through. So that the main summaries are shown here. So that one important part is that, of course, it's a very important, that to have the global consistent, comparable, and also reliable sustainability reporting. And the IOSCO has discussed this issue, and we've also concluded that the Ifrs Foundation could be the most the important bodies to tackle this issue, so that we've also decided to have a further collaboration with IOSCO to tackle this issue. So through following the discussion on last year, now let me also introduce first the IOSCO is now discussing. One of the main important issues on the sustainability reporting is that the IOSCO has also discussed this sustainability reporting issue following the establishment of the Issb, so that of course, that the IOSCO is very supportive and also welcoming this very important strong momentum towards establishing the more comprehensive global baseline by the Issb. So that one important discussion we have is that endorsement of the Issb standards. We had a similar discussion for the IFRS in the accounting field. So that endorsement of the Issb is one of the key important discussion we have. And additionally, we also decided that assurance of the sustainability reporting and disclosure is one of the main important parts, as Doug referred a bit on this during his presentation. So that I'm also appointed as one of the co-chairs of the newly established assurance work stream within the IOSCO. So that we are now tackling this very important issue as well in conjunction with sustainability reporting. Let me stop here to make a contribution to the Keiko's KPI, and I'm very happy to take any questions or comments. Thank you so much.
Thank you very much for a very informative presentation. Thank you very much. So now let's move to the panel discussion. I would like to address some of the questions to the panelists. To Carrie, you didn't have enough time to finish your presentation. How would you view the importance of the linking climate-related information to financial accounting? And also, as the Doug and Makoto brought up, what is your opinion about the auditing when it comes to the climate-related disclosure? What is your view?
Thanks, Keiko. And before that, I just want to show Sue that this was my Bible. It was an SASB guidance on how to really think about sector-specific sustainability reporting standards and how you engage with companies. Janine gave it to me. It's been fantastic. We do support explicitly sector-specific, geographically comparable information. So thank you. To Makoto-san, we applaud all of the work that's happening in Japan. On the U-Haul, the securities report, if possible, ICGN continues to encourage regulators to think about making that available before the AGM, particularly for overseas investors, so we can look at information around things like cross-shareholdings and all of the good stuff you're talking about. And just a note to Doug on the liability question, actually ICGN would support safe harbor provisions. We think that as data and methodologies become more sophisticated over time, perhaps we could sunset that. But there is, I think, a degree of pragmatism in the investment community around all of that. But as Kushik touched upon, I think for us, one of the big discussion points is around materiality and the audience of the information. Is it primarily for investors or for broader stakeholders? And quickly to the point about the importance of linking climate-related information to financial accounting standards. This is something actually fairly recently ICGM members have been fairly animated about. Good to hear from Kushik that that's something that they explicitly do and publicize. But the guidance from IASB has been in play for over 2 years now. It is the IAASB has also clarified the materiality of climate risks and opportunities. So Doug, we would encourage regulators to scrutinize audit profession a little bit more, please, on this matter. Thank you.
Well, the Makoto or Doug, something to add about assurance?
Well, happy to go first if you like, Makoto. So yes, look, it's a really important question because we have assurance around the information in the financial report. As you said, the two documents are going to have to work together, the sustainability information and the financial report, to tell a whole story. And there's a lot of demand for assurance over the information that sustainability and climate information. So that's going to have to be resolved. The International Auditing Assurance Standards Board, which I know the Issb is working with as well, has a plan to develop standards. So they tell me by the end of 2023, and they would be well, both framework neutral. I think they need a framework to figure it out in the first place, but also practitioner neutral, because there is that question about who should provide the assurance. Now, I'll give my bias, perhaps being a former auditor. I think there is a lot of benefit in the same assurance provider for the financial report, because of the interconnectivity across the documents, to give the assurance on the sustainability information. They may well, though, need to use experts and rely on experts, as they often do in the financial report. I think one of the challenges, though, and this goes to some of the timing and the phasing, it goes, well, I'll use Scope 3 emissions as an example, and that reliability question. There may be some greater challenges in terms of assurance over that information initially, despite what I said about perhaps using models and so forth. And there's still a debate about, do you seek reasonable assurance, or the higher level of assurance upfront and over all the information, or does that you move from limited assurance over some of the information to reasonable assurance over time? I could probably talk about audit much more, but I probably should let Makoto get a wording.
Thank you very much. I think that covered your most important part, so that not so much to add, but I fully agree with that. So that assurance is very important, but also very challenging part as well. So I think one of the key issue to be discussed amongst the stakeholders is that it's that in parallel with the sustainability reporting framework, that on the assurance side, we do not have any kind of a globally accepted framework for the assurance. That could be one of the important problem in this area. So I understand that the ISAE 3000, that's a standards and also guidelines by the International Audit and Assurance Standard Setting Body, that's called the IWSB, that just mentioned. So that and also that the IWSB is also thinking to have a revision, or maybe that establish a new assurance framework. So maybe following this kind of momentum, we might see a more that consolidated global framework. But currently, we do not see any kind of global baseline in this assurance framework. That could be an issue. And also that that it's also discussed in each jurisdictions and also regions, but that the issue is that who should provide the assurance services in this after you requesting a mandatory disclosure of the sustainability reporting and also assurance of this field. So that for the financial reporting field, of course, that the audit firms, especially the big audit firms, are the main providers of the assurance services. But at the same time, in the voluntary assurance field, in this sustainability disclosures, of course, that the audit firms and also audit firm related companies are one of the main important providers on this field, but at the same time, other independent providers we see, especially for the ISO-based approaches and so on. So that in the United States and Europe, they are now thinking to accept the various kinds of providers beyond the audit firms. But at the same time, as a regulator's views, we should also have a discussion on how to keep the independence of the providers on this assurance services, and at the same time, we should that avoid any kind of conflict of interest within the service providers, so that we that we have a lot of homeworks to do in this field. Mizugi-san, I think you are muted.
Thank you very much for your comment. And I guess the previous question regarding, is it better to have regional standards or reporting according to the condition of each region, or to develop standards, global standard? I guess the Kerry's investors' view is, or IASCA's view is, I guess, if you have regional standards, then you would have the fragmented markets or whatever that wouldn't have investors, or it would help investors. That's, I think, let's hear your views now. Make clear. Kerry, what is your?
So I mean, similar to reporting standards, I mean, we would hope that we could get a globally harmonized baseline for auditing, notwithstanding the evolution of this space. We must focus on, first and foremost, the importance of disclosing transition plans, net zero targets. Let's develop that, as well as understanding that existing guidance already is there. That was my primary point. We want to encourage folks to use what's already there, please.
Okay. Makoto, so from the IASCA's viewpoint.
Thank you very much. So at the IASCA, we've also discussed that the Issb endorsement, as I mentioned. So that at this moment we do not publish any documents for this. But so if I may, let me introduce my personal views. So that I think that same as Ifrs endorsement discussion by the IASB almost 20 years ago. So I think that of course that the content of the standards is of course very important, so that standards could be used and also globally accepted in a global manner. If you know that more and more jurisdictions will use Issb standards, that could be a very great, so that the Issb standards will be a global baseline in this field. And at the same time, as a regulator's view, it's very important, so that to have a proper due process, transparency of the standard setting process, and also that the governance of the standard setting body is very important. So we also had a similar discussion of the accounting standards, but you know that the process and also the governance of the standard setting body is also very important, both in the accounting and also sustainability reporting field.
Okay, thank you very much. To Kush, what are the key challenges and possible solutions associated with the effective climate-related disclosure requirements? Or for you, I guess you already have the IT, whatever, all the sort of infrastructure, and you're really, in a way ahead and prepared to disclose and then meet the requirements. That's my sort of reaction to the presentation. But if you see some challenges, and do you have see any challenges going forward, or?
Yeah, so I think the success of the Issb standards going forward will be the ready adoption of those standards across geographies. Once we have moved to sector-specific approach, then the regional approach doesn't really work. Then you merely look at it, the cross comparisons are then across sectors. And that adaptability with various reporting regulators across the world will be very important. And we have seen that in the IFRS adoption, that while the baselining was IFRS, every geography had its own way of interpreting the IFRS. In nature and climate, there should be less amount of differentiation, because it affects us all in the same manner. Therefore, the regulators in different geographies, be it in developed countries or developing countries, should accept the harmonized Issb standards as and when they come out, and deploy it across sectors. And what will happen is, once the sector-specific standards come in, There will be also definitional discrepancies will also get resolved. For example, in steel industry, you have a World Steel Association standards and a GHG protocol. So, once the standard takes into account that everything is based on GHG, it will be on GHG basis. So, I think these are some of the, I would not say challenges, but I would say these are the ones which one has to go through. Because finally, what is the objective? The objective is to come with a transparent, comparable, consistent reporting basis on which the outcome is how would providers of capital be able to fund transition. And that transition is the most important thing. So the outcome of these reporting will lead to transition finance into a low carbon economy or a net zero world for us as a community. So I think that is important. And from there, the producer incentives will also come in, because just now there are very few producer incentivization that is happening to move towards the transition. So the providers of capital, as I mentioned, has to move away from just merely greening their portfolio to actually make a commitment on funding transition, because that will be the real change that will happen in this world. So I think that is the important part, and companies and as preparers should come on and disclose what are credible transition plans with actions and timelines and technologies. It's good for me to say 2045 or 2050, but what am I going to do between that now and that period? So those things will come in if we have a good reporting framework, and I'm sure the Issb, which is working on the work done in the past, like SASB and TCFD, and harmonize it to make it one global basis. So there will be regional discrepancies on the underlying. India will have a very different situation on the transition vis-a-vis, say, Europe. That's perfectly fine, but you are making it sector specific, so you have a comparability and you are defining the journey, and that journey should be transparently available to all stakeholders, and that's fine. So I think that is the path we should follow. And for that, I sincerely hope that the Issb standards are adopted in all the materially and large economies in the world without too much customization.
Thank you very much. It's really a great, insightful comment from you. That question goes to Sue, and probably it just kind of have to go sort of to use up the time for remarks on session. Sorry about that. Now, hearing all the comments from the various stakeholders, in a way, various the positions, could you share your view on how various stakeholders contribute to promote the effectiveness of climate-related disclosure? Or, what can we do, or what can you do as a standard setter in Asia with what is your sort of thoughts, hearing from all of you, all the participants' views?
Thank you very much, Keiko, and thank you for everybody's comments. Really interesting views, and also great to hear the level of support for our work. So thank you very much, everybody, for that. In terms of what do we all need to do to, for this to end well, I think we all have a role to play as the first thing. So the first job is really to encourage people, both on the panel, but those listening, to really engage with our exposure drafts, because this is an opportunity to really make sure that what we come up with is the appropriate global baseline, that particularly we get these industry-based requirements right, and they've got the right spot in the standards. And so this is a really fantastic opportunity to get people engaged and to get a comprehensive range of views, so we've got a really good basis for redeliberations. So that's the first step. Then what we're really going to need then is the next step is, where we can write great standards, and that's our objective, to write really high quality standards that provide a fantastic basis for disclosure. But that's sort of, one piece of the jigsaw, a really important one, but only a piece. And that's where, everybody on this panel has a role to play, right? So starting with Makoto and Doug, who are very heavily involved both in the IOSCO endorsement discussions, but also the discussions in their jurisdictions in terms of the adoptions of the standards. You know, getting regulatory acceptance, adoption, mandating the use of these standards, I think is critical in terms of actually getting the global baseline that we're all working hard to achieve. So Doug and Makoto are fantastic partners and helpers in that journey, so that they've got a really important role to play. And also making sure we get it right. You know, they don't just take what I write and do it. They really help me write good stuff as well, which is important. I think then, you know, Kerry's got a really important voice. This investor perspective is fundamental. And so hearing from Kerry some of the things I wrote down about thoughtful comments in terms of you know, the industry-based requirements and why that's important for investors, some of her thoughts around the need perhaps for safe harbors and the importance of the linkage with financial statements. This messaging from investors in terms of what actual information is needed in the market is fundamental, because at the end of the day, my job is to make sure what we ask for is what investors need. So people like Kerry and others in the market with this investor perspective have got a huge role to play in helping make sure we set the right disclosure requirements, but then also on an ongoing basis, holding people to account, right? If investors don't ask questions about these disclosures, I'm always going to get told, well, investors weren't interested. And there's a massive education and inclusive process going on, which I know, you know, Kerry and ICGN and others have got a really important role to play as well. And then, of course, last but definitely not least, Chatterjee's got an particularly important role to play, because firstly, we want to make sure that what we're asking of companies is stuff that they recognize as disclosure, which appropriately reflects what they're doing, enables them to communicate with their investors in a way which is meaningful to affect change. I think Chatterjee made some really interesting comments which really resonated with me, both confirming the benefits of the industry-based requirements from a preparer perspective, which is very helpful for me to hear, but also really thoughtful comments about the fact that it's really important that we actually have information out there that enables those providing funding to understand where they have opportunities to fund transition. You know, I think it would be very unfortunate if funding to particular industries is switched off when they need funding to help them transition. And that's a really important part of the change management we're all involved in. But, you know, ultimately we need preparers to tell us what's possible for them to do, the costs of it, so we're informed, but then also to get behind it with good quality disclosure. Because what I really hope is, of course, I, you know, get up in the morning to make sure that we have disclosure requirements which give information that the market needs to make informed decisions, capital allocation decisions, that understand risk, etc., etc. But I actually hope that our requirements would be a catalyst to affect change within companies. I'm hoping that it's going to highlight the importance of good governance, risk management, and the board being really engaged in these discussions around managing and identifying sustainability risks and really dealing with them as well. So I think we're part of a bigger change management exercise, but we've all got a role to play. And another thing, sorry, and then I'll stop. Everybody's mentioned assurance, and that's also really important for us as well. I mean, this whole exercise is really about trying to bring the quality, robustness, reliability of this information about things like climate as close as we can get it to the strength and power of what's in financial statements. And to do that, we need an assurance regime that gives people confidence they can really invest based on these disclosures, that's you know, that reliable, that I can trust to make investment decisions. And assurance is a massive piece of the jigsaw for that.
Thank you very much for Sue. And then can I count it as your remarks on session? Is that okay? Sorry. So, oh, well, unfortunately, we are running out of time. And then many thanks for a great panel discussion. And then also the remarks and session by Sue Lloyd. So Lloyd, thank you very much again for your great participation. And I'll hand it back to Yonk-san.
Thank you so much, Ms. Mizuguchi, for very insightful and interactive session. Thank you very much, Ms. Lloyd, for your overall letter of remarks on session. Now, I would like to conclude today's workshop on transition finance in Asia. I would like to introduce John Bain to deliver the closing remarks. He's Vice Chair of Research and Senior Research Fellow at the ADBI now. John, please.
Thank you very much, Youngwook. I just have a few final remarks to make on this very informative event over the past 2 days. Today, of course, we talked about reporting standards and the importance of transparency and consistency. I think all speakers have underscored the importance of both of these factors for investors. Of course, you know, if we're interested in an efficient allocation of capital, it's vitally important that risks are priced appropriately, including those related to climate change. I think that looking ahead, there will be challenges in this regard in terms of how climate risks can be appropriately measured in the first case. And related to that, there are also data gaps in order for firms to really appropriately address and assess their climate risk exposures, both transition and physical risks. And therefore, there are obviously risks and difficulties in appropriately translating that as regards compliance with the reporting standards. So I think there's still work to be done in that regard. We talked a little bit about sectoral and regional specific standards. I think I would agree with the speakers that a global base in terms of a reporting standard would be important to have at the global level, because of course investors will look at the financial markets and investment opportunities from a global perspective. So it would be important to have some global standards in place. But as was stated by many of the speakers, it may be the case that there are some regional or national idiosyncrasies which should feed into the standards overall, and that's an important thing to delve into a little bit further and look into. And finally, a point I would make would be about possible pricing differences across different types of emission reductions. So Sue talked earlier about carbon offsets and transfers of carbon emission reductions along the supply chain, or even a transformation of the entire business process in order to achieve reduction in emissions. But I wonder if there are different mechanisms in place to price these appropriately, and how that would feed into reporting standard as well, at the global level and at the sectoral level and at the regional level, should that apply. So I think, you know, there's a lot to learn from the last 2 days, but I think there are clearly some challenges ahead, and I hope that this event has sparked some ideas on how to address some of the remaining gaps and fill in the blanks going forward. So thank you very much to all the speakers, and thank you to our organizers, Keiko and Youngwook, for excellent organization of the conference. So I will hand back to Keiko or Youngwook.
Thank you, John.
Okay, thank you.
With the closing remarks from John, we conclude the workshop on transition finance in Asia. If you have further questions or comments, please submit them in the post-event survey, which will be emailed to you after this event. I would like to ask all of you to respond to the post-event survey. I would like to thank all of you for your time and attendance. Thank you very much.